All right, well, good morning to everyone, and thank you for joining us for today's Caribbean Economic Outlook 2016. I'm your host, Melissa Marchand, Caribbean Strategy Director for Global News Matters, and I'm here with our co-host, Marla Dukharan, a Group Economist for RBC Caribbean. It is our pleasure to have you here with us today for the region's first Economic Outlook broadcast through the Periscope platform, and we're very excited to be on that platform. We are broadcasting simultaneously through Google Hangouts on Air and through Periscope, and we'll be receiving questions throughout the presentation. So feel free to submit your questions through either of the two platforms, and then at the end we'll be addressing some of those questions. One final piece of logistics, Marla and I were speaking right before the presentation, and we've decided to put together a presentation that we can send out to anyone that's interested, and we'll be doing that. We'll be sending that out next week. So anyone that's interested, please send an email to info@globalnewsmatters.com. Again, that's info@globalnewsmatters.com, and we'll make sure, my team will make sure that you're able to get a copy of that presentation as well. So without any further ado, I'm going to go ahead and turn it over to my co-host, the top regional economist, Marla Dukharan. And what I'd like to hear a little bit about today, Marla, is if you could tell us about what are those themes and those topics that you think that are really important for businesses to follow in 2016 in order to do business smart this year.
Thanks, Melissa, and again, thanks for having me. This is always, a highlight to the start of my year to talk about, what's going on with the global economy and, of course, the regional economy with you and with your followers. So, I'll get right into it and talk about the global economic outlook. And I'm sure most of you would have seen that the IMF had revised their global growth outlook downwards again at their last release of the global economic outlook in October. And incidentally, in 2015, they were looking at estimate of growth of about 3.1%. 3.1% is the lowest growth rate we've had, global growth rate we've had since the global financial crisis in 2009, when we saw an overall contraction in the global economy. So at 3.1%, it suggests that global growth is still very, very vulnerable, despite all of these stimulus, despite all of the reforms. And that's something to bear in mind, that we're nowhere yet out of the woods. They're expecting growth to accelerate, however, in 2016. This estimate, however, was at 3.6% in October of 2016, which is well before, the oil prices took yet another leg down, well before markets saw the kind of tumbling we saw earlier this week. And so my suspicion is that when they come out with their next estimate, we might see a further downward revision in global growth projections for this year and next year. And just to put into perspective where we're at in this region, Latin America and Caribbean was the only sub-region in the global economy, according to the IMF's statistics, that saw a contraction, or a contraction is estimated in 2015. So we're looking at all other sub-regions in the global economy seeing positive growth, except for Latin America and the Caribbean. And that's largely driven by the fact that commodity prices have softened, and Latin America, most of those countries are commodity exporters. Brazil is in a recession, and Venezuela is in a deep recession. And so this is driving the overall average down. It doesn't mean that everybody is contracting, but the overall average is down mostly because of Brazil, Venezuela, and commodity prices and commodity exporters suffering over the last year or two. So I just want to, as you suggested, Melissa, talk about some of the major themes. And I see three major themes affecting the global economy and also by extension the Caribbean economy. One of those is the major policy shifts that we've seen happening over the past year or two, security and climate change. So in terms of policy shifts, for me, the largest one that has had an impact on us in the Caribbean here so far is the U.S. Tightening fiscal policy and monetary policy. What that has done is it's caused the U.S. dollar to strengthen because interest rates are going up, and because the U.S. dollar is seen as a safe haven as well. And when the US dollar strengthens, I mean, last year we saw the US dollar strengthening by about 8.3%, according to Bloomberg's US dollar spot index. it means that all the currency pegs in this region pretty much strengthened against the other major currencies in a similar fashion because of that hard peg to the US dollar. And I'll talk a little bit more about currencies in a little while. So that's one major policy shift that's having an impact on the global economy as well as the Caribbean economy. The other major policy shift is China. China has gone from, decades ago, everything was made in China. It still is. But then things shifted to where everything was bought by China. And now China has, over the past year or two, has decided that it's going to shift its growth policy. And it's not going to be growth for the sake of growth and growth by acquisition and growth by so much capital investment. It's more organic growth, growth that is driven by domestic consumption. And that has had implications for commodity prices because demand has fallen from China. And that has also had implications for some of the countries in this region that have been very dependent on Chinese FDI, Chinese purchasing of raw materials and commodities. Suriname is a good example. So that's another policy shift that I think is having major repercussions globally. And finally, the last major policy shift that I see affecting global economic conditions as well as regional is the fact that OPEC is, to me, in effect, no longer in effect. I don't know that OPEC could continue to call themselves a cartel when Saudi Arabia is pretty much producing at the levels that they would like to produce in order to regain market share, quote unquote. And that leaves the other producers as well in the same position where everybody pretty much produces at the levels that they would like to, and there's no longer a quota system in effect. And what that means is that oil prices are now really subject to market forces, and this is one of the most important commodities in the global economy, and that has had a major positive impact for some of us in the region in terms of the tourism-dependent economies, but it's also had some negative implications for Trinidad, for example, and for Suriname as well, that we will get into in a little bit. In terms of security, we know that we have ongoing issues and events taking place with respect to migration, conflicts, and terrorist attacks. And insofar as we continue to see these events taking place, it means there's going to be a certain level of uncertainty, a certain level of pessimism, and that's going to affect people's consumption patterns and people's spending. In this region, we rely a lot on discretionary spending. And insofar as there is an impact on discretionary spending on vacations based on uncertainty, based on people feeling unsafe and not so secure, it means that that's going to have an impact on us in this region. And finally, I want to get to climate change. So we saw the impact that El Nino and natural disasters on the whole is having on other countries in the world, not just the Caribbean. We, of course, are no strangers to hurricanes and flooding and storms in the Caribbean, and I don't expect that that's going to lessen. We were lucky to have a good hurricane season last year, relatively good. But we had the warmest year on record last year, and I think it would be naive to think that this is not going to have an impact on our economy by way of, we saw all the droughts that took place and are still being affected by in Jamaica, Cuba, many countries in the region. We also saw the fact that we had lots of flooding in many countries in North America and Europe and so on. So those are things that I think will continue to have an impact on this region and globally as well. And then we have an adoption of new Sustainable Development Goals and the Paris Climate Deal. These are going to have some implications for policy going forward. So that's going to be a longer-term impact in terms of major policy shifts that could happen in the next coming years. So I'm going to talk a little bit more about some of those trends. With respect to oil prices, a couple of days ago, RBC Capital Markets released their new oil forecast, Actually, the 2016 forecast is down $12 to $40 a barrel, and the 2017 forecast is down $5 a barrel to $57 a barrel in 2017. This is not unusual. Many analysts are driving their forecast down based on what's happening with oversupply, the stance of the Saudis, and also Iranian supply coming to the market in the first half of this year. The view of capital market, or RBC capital markets, is, however, that the market is sufficiently oversupplied that if there is a geopolitical event, it's not likely to have a significant impact. So, you've seen some analysts say, for example, we're going to get back to $80 oil, $100 oil, if there is a war that breaks out between Iran and Saudi Arabia. RBC capital markets is of the view that it's not likely to happen insofar as we continue to have that magnitude of oversupply. I'll switch now to talk about that strong US dollar and also other currencies in this region. Now, as I mentioned earlier, we saw the US dollar from a spot index, US dollar index perspective, appreciate about 8.3% last year. So the fixed currencies, right, so softer growth in Cuba in 2016, but still positive. And we'll get back to you later this year with another Cuba update as to how that's playing out and how that's likely to affect the rest of the Caribbean, particularly the tourism arrivals in some of the other Caribbean destinations. So I'm just going to run through some of the growth forecasts for this year for the Caribbean. We have our fastest growing economies in the Dominican Republic and St. Kitts. So the Dominican Republic being driven by domestic consumption, being driven by the fact that it's a largely diversified economy, and also benefiting from lower oil prices and tourism. St. Kitts and Nevis, largely construction and citizenship by investment. Melissa will talk a lot about that in a little while. Then we have some of the slower growing economies. Grenada is estimated to grow around 3%. Guyana is going to soften a little bit to maybe around 2% in my guess. Aruba, probably around 2%. Much of the EC between 1 and 2%. Jamaica between 1 and 2%. The Bahamas, Barbados, I'm guessing would be less than 1%. Trinidad is likely to be the only economy that will contract this year as it had last year. The estimate last year might be somewhere between 1.5 and 2% contraction in 2015. My guess for 2016 would be roughly around a 2% contraction. And that, of course, is based largely on where oil prices are heading, have been heading, and will continue to stay at a very low level. The last time we had anywhere near a balanced budget in Trinidad, oil prices had averaged around $80. So that might be our sort of break-even oil price, and of course we're not anywhere near that level. So we quite expect that the fiscal deficit is going to widen this year. Balance of payments deficit is also going to widen, and like I said, growth is going to be negative this year in Trinidad and Tobago, and probably the outlier in that regard. So just to recap, the major themes: China, strong US dollar, possible shift in US policy, because given what's happened since the hike in the Fed rate last month, there has been a few developments that to me might suggest that there might be cause to pause on the tightening. Another thing I wanted to mention is, like with the subprime mortgage crisis, where you had easy money going after some marginal borrowers, in this region we saw, and globally as well, we saw sovereign debt increase in the last few years based on easier money. The question is, if we do have a situation with higher interest rates, how are some of these marginal borrowers going to be able to sustain these high debt levels if their debt payments become more burdensome? So that's something to look out for. Venezuela and Petrocaribe having a big impact on this region. I will let Melissa discuss that in a little while. And of course, energy costs having a positive impact on most, and a negative impact on Suriname and Trinidad. So, well, that's it for me until we get to the question and answer session. So, to know what you know, Melissa.
Well, thank you very much. Yeah, so I'm going to start off, and I'm going to switch gears a little bit and take a closer look at some of the markets and really hone in on some opportunities and some of the trends that we're seeing. I'm going to start off with tourism, and we're very pleased overall with the results from 2015 in tourism, particularly in stayovers. We saw strength coming from both our larger and our smaller markets in the Caribbean. So we had Aruba with 15% growth. That's 996,000 stayovers that they received through the month of October, which means that they again hit the 1 million mark. We also saw Cuba hit 3.14 million stayovers, which is 17.6% growth, which is very robust performance. And the Dominican Republic reached the 5 million mark, which puts it halfway to its goal to reach 10 million tourists by 2020, and that was 9% growth for the Dominican Republic. Just excellent performance from those three markets, which together combined to bring an additional 1 million visitors to the region last year. So it was just wonderful performance. We also saw Barbados up 15%. We saw St. Kitts and Nevis up 16%, and we saw some growth in some of the smaller markets as well. The story for cruise tourism is a bit different. The performance was mixed, and cruise tourism, of course, it does not bring in the revenue levels that we see from stayover tourism, but it does represent, cruise passenger spending does represent about $1.8 billion for the region each year, and you can put an additional $250 million a year on top of that for cruise spending. So it's very significant in terms of the spending that we're seeing in the region. And so if we look at this just for a minute, we had some major declines and some major growth. The declines we saw on the side, for example, Anguilla was down 42%. Aruba was down 16% in cruise passenger arrivals, and that's going to change, and I'll come back to that in just a few moments. Bahamas was down 6%. But when we talk about 6% for the Bahamas, actually represents about 240,000 passengers less that came, because it's just, that's one of the largest cruise markets, and so it's a huge difference. And Curacao was down 14%, and we also saw the U.S. Virgin Islands down 9%, which was a difference of 141,000 passengers. So on the other end of the spectrum, though, we did see positive growth coming from Antigua and Barbuda, up 24%. We saw the British Virgin Islands up 36%. Puerto Rico was up 15%. And then we also saw some growth coming from the smaller markets, like St. Kitts, like St. Lucia as well. For 2016, I'm going to get into 3 trends that I want to talk about today. And I'm going to start off by looking at infrastructure improvements related to tourism, because I think this is really important in what we can expect for 2016. The Antigua and Barbuda VC Bird International Airport, the new terminal was just recently inaugurated, and we've already seen some new airlines coming in, which means increased airlift that we're going to see coming to the region, coming to Antigua. So we're seeing that as definitely being favorable into 2016. Aruba, we're expecting to actually recover its 2014 level of cruise tourism this year with around 600,000 passengers coming, and that's going to happen because Aruba took the cargo operations out of the port of Arandastad last year and moved them to Barcarena, and so Arandastad can now receive up to 4 ships a day, which doesn't mean that they're actually booked for that, but that's their capacity, so that's definitely positive as well. In the Bahamas, the Exuma International Airport will be under construction in the first quarter of this year. Bermuda is awaiting significant investment, around $1 billion in investment, focused in largely on tourism infrastructure, and that's because of the America's Cup, which is coming in 2017. The Dominican Republic has significant investments in tourism infrastructure as well. The Santiago to Puerto Plata highway is a $300 million investment. There's also going to be an expansion coming to the Cabo Rojo Airport, and Guyana, the Cherijegan International Airport as well. We actually saw the Cherijegan International Airport reported 6% growth in passengers and in cargo last year, so we're already starting to see some improved performance coming there. In Jamaica, we're expecting around 2,000 hotel rooms that will be under construction by mid-year 2016. St. Kitts is also going to increase its hotel room stock. Its government just recently confirmed that hotel room stock will be up by half by 2018. And there's also a second cruise pier project in line for St. Kitts. And then St. Vincent and the Grenadines, the international airport, Argyle Airport, is a really big deal. And this is something we've been looking forward to for some time. The government's now saying that it will be ready at the end of the first quarter this year. And this airport has really been built with this philosophy of, if you build it, they will come. And the idea is that investment will follow once the investors see that there's really the infrastructure in place to bring in these long-haul flights and to bring in greater tourists. So we're expecting to see investment in hotels. We're expecting to see investment in tourism, in infrastructure follow, and then tourism, of course, increase as a result of that. The next topic in tourism that I want to focus on is medical tourism. And this is one that we get a lot of questions from our clients on. And I think it's worthwhile spending a few minutes on this. The Health City Cayman Islands is a multi-billion-dollar project. This is the first one I want to focus on. It's a multi-billion-dollar project that's still in its early stages, but we're already seeing a huge impact in the region from this project because it's really brought access to the most modern technology, to state-of-the-art equipment, to new procedures. And this is arriving to the region in many cases for the first time. So Health City Cayman is a brilliant example of really what's possible for the Caribbean when we identify a gap and turn it into an opportunity. Health City Cayman Islands is also, I just read yesterday that they had announced $25 million in further investment for 2016 and another $100 million to be invested 2017 and 2018. So that project is going to continue to expand. The OECS Cancer Center in Antigua opened mid-year last year, and Guadeloupe also has a cancer treatment center under construction. Jamaica opened a state-of-the-art medical tourism facility in St. James last year. Puerto Rico has a $196 million cancer center that will come online this year in 2016. And Puerto Rico's also really taken the lead on Medical Tourism Association certification, and we're already seeing transporters, hospitals, hotels getting their certifications in place in order to better attend to this new segment of tourists. And then Cuba, of course, also has a very interesting offering from the standpoint of specialized medical care. And talking about Cuba, I'm just going to transition to the third theme that I want to touch on with tourism, which is Cuba. Okay, and as I mentioned before, Cuba's really had impressive growth in arrivals this year, up 17.6% at November with 3.14 million visitors. Travel from the U.S. to Cuba increased 75% last year. That figure does not include Cuban Americans. And the recently announced civil aviation agreement is going to have an impact in further increasing tourism between the two markets. And that's going to happen particularly because it's going to create downward pressure on prices for airfare. Now, let's remember that U.S. citizens cannot legally travel to Cuba for tourism right now. But last year, 147,000 of them, non-Cuban Americans, traveled to Cuba anyway. So it's definitely been a market of growth, but I think it's important to also really take into account that it's not the only reason that Cuba's growing. It's not the U.S. 16 of the top 18 markets, source markets for Cuba, grew in the double digits last year, and I'm not talking about 10 or 11%. There were markets growing 20%, 30%, or even higher. Air connectivity is also a huge piece of what's favoring Cuba, because there are 65 foreign airlines that currently serve the Cuban market. There's connections to Beijing, to Brazil, to Argentina, to Spain, to Italy. Cuba is really connected to the world. As we see relations with the U.S. continue to improve, as U.S. citizens become free to travel to Cuba, there will be some effects on especially the nearby markets, and the ones that we're expecting to be most affected, obviously the Bahamas is going to be quite affected, but I think it's important to look at the segments that are going to be affected, and one of them is going to be last minute travel, and the reason for that is the distance is very short to Cuba. It's very close to the United States, and so there is the possibility that some of the last minute travel to the other nearby islands could actually be taken over or be substituted by Cuba. Ferry service is also going to be it's going to make a major impact, particularly for the Bahamas, and really will compete with the Bahamas in that space once ferry service begins to Cuba. The other issue about Cuba is that a lot of these U.S. travelers are actually curiosity travelers. So we really don't know at this point in time how many of them are going to be repeat travelers. But one thing that I think is really important to take into account is that the more you're getting U.S. citizens traveling to the region, it requires a series of logistics. It's always important to keep in mind that less than half of U.S. citizens actually have a passport. So the more we get attention on the Caribbean, the more we get people excited about going to Cuba, even if it's just, because it's been prohibited for so long, I think the better that is for the region overall in the long term, because their repeat visit doesn't necessarily have to be to Cuba. It could be to other places within the Caribbean. And the last thing I want to talk about related to Cuba is that when the definitive commercial airlift agreement is in place, when commercial flights begin between the two nations, between the U.S. and Cuba, and we see prices drop, which we're expecting a price drop of around 25%. It could be greater than that. That price point is really going to be determinant in the impact it could have for the rest of the Caribbean. And I actually think that if the price is right, if the price is low enough for airlift, we could actually see Cuba starting to compete with U.S. domestic travel locations, not necessarily even with the Caribbean locations. So destinations like Florida, like Myrtle Beach, like Virginia Beach, could actually see Cuba becoming a substitute. And in the end, it's going to be really the responsibility of each individual destination to make sure that Cuba is an incremental tourism for the Caribbean and not taking away from its current visitor base. Now I'm going to transition to talk a little bit about construction, and we just heard Marla talk about the economic activity and a little bit of what she's expecting with her forecast. And particularly with the smaller markets, construction is a sector that we really have to follow closely. And I'm going to give an example of this, and that's Antigua and Barbuda. The construction pipeline is very active in Antigua and Barbuda, but what we have seen is that the time between an announcement of a project and the execution of the project has been quite slow. And so that actually is what caused, in large part, the economy to underperform expectations last year. Because a lot of these projects that were expected to take place and break down last year, they haven't yet broken ground. And so, as we start to see activity ramp up, then we'll of course see the effects in the rest of the economy in Antigua. But just to name a few of the projects underway, last year we talked about the Yida development, which is a special economic zone that broke ground in May of last year. And there's also a resort. It's a $1 billion project. There's also a resort. It's a major project, but it's not the only one. That project has received considerable pushback from the community as well. And there's two projects in particular that have had issues with in Antigua and Barbuda with the locals. That one and the Paradise Found project, which is a $250 million investment in Barbuda, and people know that investment more than by its name, Paradise Found. They know it because of the investor, U.S. actor Robert De Niro, who is one of the investors behind that project. But there's also a major project by the Canadian group Sunwing that's a 500-room all-inclusive resort. We're also expecting there's an expansion at the Elite Islands Resort, and there's also developments at Nonsuch Bay. So there's a lot going on, and Antigua and Barbuda really keep an eye on this year. The Dominican Republic is the next one I'm going to touch on. The construction sector in the Dominican Republic grew 18% last year, which is just phenomenal growth. And I already mentioned in tourism some of the things that are going on, but I also want to touch on the 720 megawatt power plant that's being constructed in Punta Catalina, which is it's a $2 billion project. These are coal-fired plants. There's 2 plants. And construction will complete on the first one in 2017, which means that in 2016, construction will continue to be very active around that project. There's also a $5 billion project at the border with Haiti, which is going to be carried out over a period of 15 years, which is a very interesting project. It includes an industrial park, it includes utilities, housing, port upgrades. So we're going to see a lot of activity around that as well. And then there's also, again, the hotel construction pipeline. You have the Nickelodeon, the New Onyx, the Majestic Mirage, Homewood Suites, Hotel Excellence, the Hampton, and the Punta Arena project was just announced that by the end of Q1 that we will also see that project under construction, which includes 2 hotels of 1,200 rooms each. So that's a major development to watch as well. And then St. Kitts and Nevis is the other one that Marla mentioned that has a very, very active construction pipeline. And there's at least 6 major hotels that are in different phases of development. These are the Kishin Hill, the Park Hyatt, the Embassy Suites, the Radisson, the Koi, and Paradise Palms in Nevis. Now I'm going to touch on industries related to construction, and I'm going to begin with refineries. And we have a lot of refineries around the region, but I'm only going to touch on 2 today. One is the Aruba refinery, and there is a negotiation underway with Citgo, and we're expecting to hear if that's going to move forward or not by the end of the first quarter. But that would actually see the refinery turned into an upgrader for heavy fuel. Then for Curaçao, the refinery modernization project is a $3.1 billion project that's going to be executed over a period of 3 years, and there's actually already 16 companies that have sent in expressions of interest for that. So that's another one to keep an eye on. Then the last thing I'm going to touch on related to construction is logistics and infrastructure. And the new port facility in Santiago de Cuba is one that we think is really important to follow. And a lot of people may be asking, well, why a new port in Santiago if they just built this, $900 million port in Mariel? And the reason for that is that this port is actually financed by China, and the project is related to the canal project that China has for Nicaragua. So that's another one that we're really keeping an eye on. The Bahamas also has a $300 million investment in line for the Freeport container port. Bridgetown Port in Barbados will also see a $100 million investment. Dominica's infrastructure, as Marla alluded to as well, was also damaged severely through Tropical Storm Erica last year, about 1.3 billion EC dollars worth of damage. And so that means that there's going to be a lot of rebuilding activity happening in Dominica as well. And then the Kingston Container Port terminal in Jamaica, also the privatization deal that took place in 2015 is going to unlock about $500 million in investment as well. Now the last thing I'm going to touch on today is Petrocaribe and the opportunities with Venezuela. The Caribbean really did not leverage the resources made available under Petrocaribe over the last decade to create energy independence and to reduce reliance on fossil fuels. The resources were largely put into infrastructure like airports and hospitals and schools and stadiums and highways, and in reality that creates greater demand for energy. So we're now coming into a new era of Petrocaribe, and I think it's important for everyone to really take into account that Petrocaribe never made financial sense for Venezuela, because PDVSA has been borrowing for years at a rate of over 12% to lend to the region at rates as low as 1%. So the only thing that's allowed Venezuela to do that was the high price of oil. But the Venezuelan barrel of oil is now below $28, which is where it stood in 2004 when Petrocaribe was conceived. And as a matter of fact, I just received information yesterday that it was down to $24 the information on the ministry's website says its point is, it's at the level it was when Petrocaribe began. Venezuela cannot financially sustain the program the way that it's currently being operated. Shipments have already been cut back. We've seen that in recent years, and we expect that more debt repayment deals could be in line. But there's something else that has changed in Venezuela, and I think that we really have to mention it, which is that the legislative branch of government, who approves international agreements and approves financing, is now an opposition majority. And the oil diplomacy objectives that were pursued by Hugo Chavez and by Maduro under Petrocaribe are not aligned with the priorities of this new National Assembly, which is really focused on developing and recovering Venezuela's domestic economy. So what we're seeing in the immediate term for Petrocaribe is really promises unfulfilled. And we've seen Maduro, make these trips around the region and, making these promises like the Simón Bolívar Resort in Antigua. And in reality, we're not seeing these projects actually being executed in the near term. What we do is that there's an opportunity to change the conversation from one of what can we get from Venezuela to what can we offer to Venezuela, and how does Petrocaribe become an opportunity for the Caribbean to offer products and goods to Venezuela. So, what we really do see are export opportunities. Venezuela's economy is completely in the shambles right now. The new National Assembly is committed to giving priority to building the nation's infrastructure and also to stocking the shelves with basic goods. And right now, Venezuela's productive sector simply does not have the capacity to respond to that.